Hey everyone, Couch Investor back with another video for you today. So in today's video, we're going to discuss the current market situation, what I've been doing in the last couple of weeks, what I will continue on doing moving forward, because in my opinion, every dip, every correction is an opportunity for long-term investors. Obviously for short-term and traders, this is a pretty bad time. Unless you're a professional trader, then volatility is your main advantage. But in this video, I'm just going to share my thoughts on what has been going on in the market, what I have been doing, and what I plan on doing going forward. Before I do so, I just want to thank everyone that has been subscribing to this channel. And if you haven't subscribed yet, hit that subscribe button. And if you like these videos, leave it an early thumbs up, as it really helps me outgrow the channel and get my videos out there. So without further ado, let's dive into this. Right, so first let's take a look at a specific graph, in this case the S&P 500 tracker, SPDR. So obviously I'm not going to show you the March one from last year because that's a very particular one, but let's take a look at the one in September. Here we can see we've reached an all-time high, then it dropped 10%. We've gone back up the month after that, dropped another 8% from the little bottom here if you want to call that, then went all the way back up, end of January, dropped 4%, went back up. The current market state dropped only 3.5%. And yet, lots and lots of growth stocks have taken a huge hit. We can see it right here. Mark, if you don't follow his account, I highly suggest you do. In the past 30 days performance, so Carnival Cruise up almost 40%, American Airlines up almost 35%, Live Nation up 28%, and then you have stocks like TDOC, PLTON, PLTR, all down 22%, 23% and 34%. I can name a lot more stocks that are down 30, 25, even 40%. Most of them are growth stocks. Now, if you want to quickly look at the NASDAQ, we can see the same thing. NASDAQ in September was down 13%. Then in November, actually, we can see huge red candle right here, down 12%. Then we've had three very good months. End of January, first little dip, 6%, went back up. Second dip, only down 5%. So if you want to speculate and say, oh, we're looking for a double bottom right here, like we've seen in September and in November. So yes, maybe the market has to go down another 2% or so, then we have our double bottom. But again, technical analysis is great in hindsight, but it's not always going to predict what's going to happen in the future. But with that said, we might not be that far away from, let's say, a bottom. Now, let me ask you a question. If someone came to you and say, hey, I want to swap my stocks for your stocks. Now, you have stocks like TDOC, PLTR, PLTON, Tesla, Roku, you name it. He has stocks like American Airlines, Delta, Carnival, MGM, etc. Would you accept the swap or would you not accept the swap? Let me know down in the comments below. My answer is pretty simple. I would never accept such swaps. Now, another reason you might say that's why the stock market, especially for the growth stocks, are dropping is the 10-year Treasury. As we can see, since last month, the yield has gone up from, let's say, 1% to almost 1.6%, and now it dropped again to 1.4%. Now, to compare that to the longer term, as you can see on the 5-year chart, you can see that before the pandemic in 2019, the yield was at, I think, 3% or so. Let's take an average. 1 year ago exactly, before the pandemic hit us, it was very close to 2%. As you can see, it was as low as 0.5% in the summer. So it has gone up quite nicely. Now, does that mean that you have to sell all your growth stocks because of the 10-year Treasury up to 1.4%? I highly doubt that's the reason you have to sell your growth stocks. To me, this is just an indicator that the economy is recovering and recovering well. Obviously, we still have a long way to go to reach those, let's say 2% or even 2.5% if that will ever happen in the short term. But overall, the 10-year Treasury yield going up is not such a bad thing. Another reason why there's a huge sell-off, especially in growth stocks, might be because of margin calls. Maybe a lot of people need to cover their positions, so brokers are asking them to cover their losses because maybe they've been buying lots of stocks in the last couple of months and now their position is down 20%, 30% and they have to cover up. So they are forced to sell, and if you're forced to sell, stock price goes down. It's a domino effect. You're forced to sell, I will be forced to sell, etc., etc. I'm not using margins. I'm not using any leverage at all. Never have, never will, because I don't want to be told you have to sell your position at a specific time because you're in a losing trade. Right, to conclude, if you follow me on Twitter, you know I have taken some profit of my Tesla shares. I sold at an average of $800, so no, I've not sold the top, but I haven't sold the bottom as well. With those profits, I have opened a position finally into Shopify. I have bought some dips in a couple of stocks, in Palantir and Unity. I've bought more Airbnb stock as well. And I have finally bought into ARKG as well. So I've taken those profits to invest in other stocks, to reinforce my position and to open new ones. Does that mean I'm bearish on Tesla? No, that does not mean I'm bearish on Tesla. As you can see, I'm wearing a Tesla shirt today. I just thought maybe my position is big enough. It's time to take a little bit of profit and invest in other companies that maybe in the short term might do much better than Tesla, because as of now, you all know the share is a bit expensive. Maybe today is less expensive than 2 weeks ago, but overall, right now, what we're waiting for is FSD. Without FSD, Tesla's stock price right now is a bit expensive. I think everybody can agree with that. Does that mean that the stock will not go up? No, the stock will probably go up after the market has figured out what the hell is going on right now. But this is my portfolio. This is my way of building my portfolio for the long term. Taking profit does not mean I'm bearish on a stock. No, it just means I want to secure those profits and reinvest it in something else. That will be it for this video. Let me know down in the comments below what you've been doing in the last couple of weeks. You've been selling, been buying, what your portfolio looks like. My portfolio looks like crap. It's been red since that little correction has started. But hey, I'm having fun. I'm buying some dips here and there because in the long term, I know my portfolio will do much better than the average market. So I'm curious to know what you've been doing in the last couple of weeks. Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed yet to this channel, hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.